As mentioned before, insurance is a promise. It's an agreement where the insurance company promises to pay out a sum of money to the insured person if a specific event happens. Now, in return, the person pays a regular premium. This is usually monthly. If the person doesn't pay their premium, the insurance contract becomes null and void, and the insurance company won't pay you out when disaster strikes. Now, there are many different types of insurance. In this course, we focus on personal insurance, which can be broadly categorized into short-term and long-term insurance.
Short-term insurance is a policy that gives you protection for a period of time. This insurance is designed to give you temporary protection against loss or damage to your private property when certain insured events occur, such as a vehicle accident, car theft, hijacking, damage to household items and property. Long-term insurance protects something even more valuable than your belongings. It covers your life or your ability to earn an income. Long-term insurance policies include policies like funeral cover, life insurance, disability cover, severe illness, and income protection.
Under short-term insurance, the main types of insurance are as follows. Home insurance. Homeowners insurance, also known as home insurance, protects your home and possessions against damage or theft. Virtually all mortgage companies require borrowers to have insurance coverage for the full or fair value of property, usually the purchase price, and won't make a loan or finance a residential real estate transaction without proof of it.
Car insurance. When you buy or lease a car, it's important to protect that investment. Getting car insurance can offer reassurance in case you're involved in an accident, your vehicle is stolen, vandalized, or damaged in a natural disaster. Instead of paying out of pocket for auto accidents, people pay annual premiums to an auto insurance company. The company then pays all or most of the costs associated with an auto accident or other vehicle damage.
Medical cover. Medical aid, including hospital plans. Medical aid schemes typically exist with one main function in mind: to provide cover plans to help people pay for their healthcare needs. These can include everything from doctor's visits to hospital accommodation, surgery, nursing, dental work, and other medical-related expenses. Medical insurance. This product was introduced as a more affordable option than medical aid and is governed by either short or long-term law and not by medical aid regulations. As a result, health insurance policies do not have to include the prescribed set of minimum benefits that medical aids do and can impose different waiting period criteria, as well as a maximum age entry limit.
There are different health insurance product types that either provide some cover for in-hospital costs or out-of-hospital costs. For some products, a lump sum is paid out for each day that you are hospitalized. The payment may only start from the second or third day that you are hospitalized. The payment is made directly to you, and the money can be used to pay the cost of medical treatment or for other daily expenses incurred while in hospital. Depending on the policy you choose, health insurance can also provide cover for certain day-to-day medical expenses like doctor's visits, cold and flu medication, or trips to the dentist.
Medical gap cover. There's often a gap between what your health practitioner charges for in-hospital expenses and the amount your medical aid has agreed to pay. That's when medical aid gap cover is used. Most medical aids also have defined co-payments that you have to pay on certain in-hospital procedures. Depending on the gap cover you choose, these shortfalls could also be covered. It's a short-term insurance that makes up the shortfall between your healthcare costs in hospital and how much your medical aid policies pay out. It protects you from unexpected, exorbitant medical bills.
Lifestyle insurance. Travel insurance. Planning a magnificent holiday or business trip? Then travel insurance will help protect you should your flight be cancelled or if you become ill while you are out of the country. Here are a few reasons why you should take out travel insurance. Cancellation on the airline's part due to strike, riot, or civil commotion. Loss or theft of travel documents. Personal liability.
Legal expenses in case something happens. Curtailment. Cancelling a leg of your trip. Theft of luggage. Medical expenses abroad when you are in an accident.
Legal assistance. Lawyers do not come cheap. And if you foresee that legal costs could affect your savings, you can take out legal assistance cover that would become necessary under the following circumstances: marriage mediation, family mediation, debt advice, contractual matters, criminal matters, labor matters.
Pet medical aid. Pet insurance is like medical aid for your pets and can provide cover for accidental injury, illness, and preventative care such as vaccinations, flea control, and sterilization. Pet insurance, also sometimes referred to as pet medical aid, allows you to provide the best possible care for your family friend when the unexpected occurs.
Under long-term insurance, the main types of insurance are as follows. Life insurance, including disability and severe illness cover. Essentially, a life insurance policy is a contract between a life insurer and a policyholder that offers the policyholder peace of mind, knowing their loved ones will be financially secure when they die. It's a means of protecting anyone who is financially dependent on you should you pass away, become disabled, or get a dread disease. Depending on the life insurance policy you take out, you may also get an amount paid out to compensate for the costs of a funeral, which can ease the burden during a difficult time for your family.
Funeral policies. Funeral cover or funeral insurance is a type of insurance that pays out a lump sum when you pass away. You can also purchase a family funeral plan, sometimes referred to as extended cover, which pays out a lump sum in the event of the death of your partner or spouse, your child or children, and/or any other family member that you have chosen to cover with the policy. The money paid out is intended to help with the cost of the funeral. Now that we're familiar with the main forms of long-term and short-term insurance, let's look at each of these in greater detail, and also how you can get the most out of them and pay less by reducing your risk profile.